Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today's net asset of my account is $61,780.21. Today, the Apple has closed down 0.16%, SQQ closed down 0.7%, SPY closed up 0.69%, and United Natural Gas closed down 0.54% to 14.81. Today, the market generally performed higher. Dow Jones Industrial Average closed up 0.91%, Nasdaq closed up 0.3%, and S&P 500 closed up 0.58%. Today, industries except for the tech industries generally closed up, with banks, the financial industry, auto manufacturers, and natural resources closing up with a gain of more than 2%. Especially the auto manufacturers closed up for about 4%. Today, Dow Jones closed up for 348.5 points, recording its record high, and Wall Street has been focusing on the Treasury yields and the U.S. retail sales data. After the two data releases, the PPI and the retail sales, the dollar index continued to fall. While the U.S. Treasury yields fell, the yield on the 10-year notes fell 2.3 basis points to 4.244%, after falling as low as 4.187%. Investors received the latest batch of economic data on Thursday. The Labor Department reported initial claims of 212,000 in the week ended February 10th, versus 220,000 expected versus 218,000 previously. The U.S. Import Price Index rose 0.8% month-on-month, and the import price index fell 1.3% year-on-year in January, in line with expectations. Overall, the U.S. Fed's manufacturing index was negative 2.4% in February, which is better than expected, and U.S. home builders' confidence rose to a 6-month high in February as home buyers continue to take advantage of mortgage rates that fell from an October peak. Overall, the Commerce Department's retail sales revenue fell 0.8% in January from the previous month, the biggest drop in nearly a year, indicating a slowdown in economic activity. Economists worldwide Dow Jones expect a 0.3% drop. The surprise strength of the U.S. economy was shattered after the U.S. retail sales data. The move follows Tuesday's CPI data that delayed traders' bets on a rate cut, while today's data suggests consumers are slowing, a dovish signal, which could boost the probability for a rate cut. The retail sales generally fell in January after a strong holiday season, raising questions about whether consumer spending at the start of the new year will continue. Economists said U.S. retail sales fell sharply in January, but the market should not value the data too significantly. The decline came after the strong performance during the holiday season, and the December sales data was particularly strong, including the last Q4 of 2023 in general. So therefore, the January 2024 data looks unusual compared to the seasonal factors. And individual seasonal adjusted changes in these months should be ignored when trying to determine trends in data. The fundamentals in the U.S. seem to be quite good, and consumers have strong purchasing power. Some economic data are complicated, but the fundamentals are sound. And strong business activity, investment, and workforce participation could pave the way for a long-term growth. The U.S. has achieved a strong broad recovery, with inflation rapidly falling its 2% target. Results on Thursday were mixed. Cisco announced layoffs and provided a weak forward sales forecast. TripAdvisor, the company's revenue and profit both exceeded expectations. On the overseas economic data on Thursday, the UK economy has reported to be in recession since the second half of 2023. Britain contracted 0.3% in the fourth quarter, after contracting 0.1% in the third quarter, after expecting a 0.1% contraction, and suggesting that the economy fell into recession in the second half of 2023. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.